Good morning, everybody. Hope everybody's doing well today. Let's get to Mr. Tom Gentile in 5, 4, 3, 2.
Hey, good morning, everybody. Wednesday, November 24th, 2021. Yes, I've got my festive Thanksgiving Day attire on. Welcome, everybody, to the opening bell. I'm Tom Gentile. Again, Monday Morning Live. Glad to have you in here. Give me a shout. What's the temperature looking like where you live right now? Because I didn't do this just for show. I did this because it's cold outside. Baby, it's cold outside. As we come in here one day before Thanksgiving, we got a little chill going on here in Florida. But I am imagining that by noon, this is coming off and shorts are going back on. Where are you guys coming in from? Let me know what's happening here. By the way, I want to also welcome the YouTube group again. We're broadcasting here live on YouTube and on Monday Morning Live. So glad to have you guys hanging in here. Earl, Ron, good morning. Adrian, is it 30 in Atlanta already? Myrtle Beach, 43. Everybody's getting a little bit of the chill, unless you happen to be south of where we are right now, and I'm in Sarasota. So Sarasota, Florida got a bit of the chill today. Ryan, how's it where you are, buddy?
It's cold. I'm not liking this cold. I need it to be summer again.
And where are you at right now?
I'm in South Carolina.
Okay, all right. Well, yeah, I mean, you're getting a little bit of the extra chill too, and you getting ready for the holiday weekend?
Oh yeah. Got some family coming into town, and just eating a boatload of turkey.
Hey, you know what? If you're gonna catch me shopping at like a Walmart, it's late at night.
Yep.
Okay, I had to do a couple of 11 a.m. shots out to Walmart in the last couple of days. Me and the wife, and we went out for some extra things because we're doing Thanksgiving at our house.
Oh, nice.
Our family's kind of doing a split Thanksgiving. We got half the family here, and we got half the family in New York. And I am happy to be the half the family that's in Florida right now. But I went to Walmart, and I'm hearing about the news where only one turkey per person, and 2 cranberries per person. It sounds like we're rationing out stuff. When you start to listen to the mainstream media, you go out there and we're at Walmart, we're at Publix. I mean, I think the only thing that I saw that Walmart was out of stock on was ammunition. That was out. The entire shelf, the entire 24 feet or whatever they have of retail space for ammo, gone. I mean, I might have saw 1 or 2 packs. I mean, 1 or 2 packs, that was it.
Really?
And then guns. They got the little revolving, the guns that revolve around like it's engagement rings. Okay.
They have the little turning case.
Yeah, the turning case. So they had like 3 guns in the 2 turning cases at the Walmart that we shop at. Otherwise, the food was there. And what about this? Thanksgiving's going to be the most expensive on record. I mean, if you eat more, yeah. But I mean, we were looking at turkeys, and my wife scratched her head. She goes, "When does a turkey cost $8? And who would buy an $8 turkey? $8. I mean, my wife's looking for organic or something that that she knows, that she looks at the ingredients of that turkey, and she's got to be able to read them. You got to be able to pronounce the ingredients, or she ain't buying it.
Yeah.
I mean, so I'm looking at it, I'm like, yeah, I mean, this is a $50 turkey, and it 24 pounds is what we're looking at. But I mean, you can find Thanksgiving meals for probably about the same price that you did last year. So I just don't get it. Just another reason why, do your own homework. Don't go with what you see happening from social media or from the mainstream media, because it's just not there. So hey guys, let's get into it. We're gonna hey Ryan.
You could always go the Nick Black route and eat steak and lobster for Thanksgiving.
You know what? And that was my thought. my thought was, okay, if we're really out of turkey and we're really out of gravy and stuffing, and I mean, we actually had to look around a little bit to find gravy and stuffing. But I mean, if we're out of all that stuff, I got some Wagyus sitting in the freezer. I'll pull those guys out and start
There
thawing
you
them
go.
now.
There you
But
go.
but no, we didn't have to do that. So anyway, guys, what do we got going on for you today? So I want to talk right off the bat about crypto. I want to talk a little bit about what's going on. Did crypto hit a dead cat bounce? What kind of news, positive and negative, did we see hitting the crypto markets as well? We want to talk about over and underpriced options today because I did not get to those yesterday. I want to talk about what we did last week with NVIDIA and how it's going. And I also want to talk about, I want to give you a new trade looking at high probability. We're going to try to wrap all that up here within the next hour. If you have questions or comments, whether it's about prime rib or whether it's about prime trades, let me know. Put it in the chat box. We'll be popping in and out of the chat box during the hour, looking at your questions both on the Money Morning Live stream and the YouTube stream, which we're seeing starting to load up here. So good morning, all the YouTubers out there. Karen, good to see you. I see Karen's doing most of the chatting over there in the YouTube area. So good to have you coming in from San Antone. And Glenn's popping in here from Orlando. Glad to see both of you in the chat as well as others. Okay, so let's get right to it. Let's talk about crypto news. And I want to talk about crypto updates. And and then we'll bring a chart up too, because I want to talk about that dead cat bounce and why I actually kind of like it right now, because I saw some signals happening in two of our cryptocurrencies, and we'll talk about those as well. Okay, because I think I've probably got at least three, at the very, very least, three trading opportunities for you today. Two of them are in crypto, and we will have more than one in the stock market. So this is Three Trade Wednesday, we'll call it. But let's take a look at our crypto news. So some of the stuff coming across our desk here very recently. Number one, India bans the use of private cryptocurrency. Now, this is not anything that should be a big shock. India and China seem to have their heads together when it comes to banning cryptocurrency. I think that if you look at on the record, they're probably going to say, oh, we're banning cryptocurrency because it's bad. We're banning cryptocurrency because, there's theft involved. And it's all those unscrupulous people who own cryptocurrency, and they're trying to do things, illegally. They're using it as illegal. Hey, listen, if anybody wants to do anything illegal in the world of currency, just pull money out of your wallet, because that's been happening for centuries. Why cryptocurrency is getting a bad rap on this, I don't know. But India was teasing the idea of using crypto, but they submitted a bill ban, all right, on most cryptocurrencies. The bill does not state that they're going to be looking to create a central bank digital currency. The bill does state they're looking to create a central bank digital currency, but they're banning private cryptocurrency. Now, obviously, coin prices fell on this news, but they didn't fall they didn't drop 10%, 5%. They really didn't do that, okay? Though trading is still allowed in India, banning the use is not. I would have thought that this was one of those areas where if you were looking for an outcome in India, this would have been a great reward risk piece of news. And the reason why is because if India would have come out and said, we're going to allow use of cryptocurrency in India, that would have been a big, huge plus. But the fact that everyone already thought they were going to go to the side of banning, and they did, it really did not push cryptocurrency down that much. All right, let's take a look at some news that might be positive for cryptocurrency. And that is that the Brazilian crypto exchange expands to other Latin America countries. So, first of all, did you know there was even a Brazilian crypto exchange? Yes, it's called 2TM. This is a holding company for Brazil's largest crypto exchange, Mercado Bitcoin. They're going to execute a few acquisitions to expand in Argentina, Chile, Chile, Colombia, and Mexico. And then there's some more information that we've put out there about the blockchain infrastructure provider, etc. So this is obviously a positive move, okay? A positive move for crypto. And then I got one more, which is kind of I don't know if it's positive or negative. We're going to find out by looking at the charts here in a moment. But take a look at the Ripple CEO. All right, Ripple CEO is Brad Garlinghouse, and he's still trying to come back and get Ripple back on Coinbase. But they've got a little ways to go on that. But I mean, take a look at this. They say that, or the CEO is basically saying that riding inflation is creating tailwinds for the crypto market. Now, keep in mind that the reason he's saying that is because they've seen crypto moving higher, and the idea of inflation coming in is getting greater and greater. I mean, look at what happened today. Look at the jobs numbers. Claims for U.S. jobless benefits plunged to lowest level since 1969. All right, that's why we open lower. That's why the stock market's lower. That's why we're seeing moves to the downside right now, and that we saw the futures markets drop immediately following that news. So Ripple CEO saying this is actually good for inflation. Now, I will agree with him when I see Bitcoin go up on a day like today. So what's Bitcoin actually doing? What's going on in the world of cryptocurrency? Well, here you go. Here's the world of cryptocurrency right now. Now, what I have here is I have a chart, a daily chart of crypto. Red mouse on. Daily chart of crypto takes us all the way out here to August 17th, where we saw crypto from the mid 40s to the low 50s, creating a move to the downside. Now, you got to remember, set the stage here, all right? And I'm going to do this. I'm really going to do a lot of year-end stuff when we get into December, guys. I mean, we've had some very, very good calls on cryptocurrency. One of the calls I made early in the year was, it wasn't that hard of a call. We were saying 50,000 to 65,000 for 2021. Well, mission accomplished, target acquired. We actually did that, and we did that in the first half of the year. Well, maybe not 65. 65 came in October, but we hit 50,000 in the first quarter. Made it to 60, the low 60s, before falling off and dropping back down to below $30,000 for Bitcoin. From there, we ran back up into the 50s to see ourselves come back down to around 40,709. That's the double bottom that you saw here happen in September. Now, I just want you to pay attention to this for a moment, okay? You have a double bottom, and that double bottom has hit that 40,000 area once and twice, and it happened over about a 10-day time span, okay, before we started moving higher. Now, I'm trying to, and it's hard to do this, and as a crypto holder, I don't do this. But as a crypto trader and as a crypto analyst, and I don't really call myself an analyst, I call myself a trader who likes to analyze the markets. We're seeing a 10-day double bottom back here in September. And now I'm kind of looking at what's going on here with cryptocurrency, in terms of what we see happening now. And we're about 7 days into a 10-day move to the downside. And we really, at this point, we're double bottoming. All right. We had a bottom last week back below 55, around the 50, call it about 55.5. And where are we at right now? We're around 56. In fact, if I go in and jump into Pro, all right, go into Coinbase Pro. Let's hop into Coinbase Pro. Let's take a look and see what Bitcoin's doing right now in it. And you can see here, out of all of the cryptocurrencies are down again today. Bitcoin's at 56,000. It's down about 3%. Guess what? It was up yesterday. It was up 5% yesterday. Ethereum was up 8% yesterday. So we're giving back a lot of where we were, right? So we could see Bitcoin. But then you're looking at here is a 15-minute bar, all right? This is not a daily chart. We want to look at a daily chart. Let's go look at a daily chart and let's see what's going on. And you can see with the daily chart, you can see the 67.5. That was 3 weeks ago when we were celebrating. Remember, what's happened? What has happened between 67.5 and 56,000 where we are right now? what's happened? I had somebody tell me, one of my family members said, "Oh, I lost thousands. I lost thousands in Bitcoin." I said, "Did you really lose thousands? Do you still have your account?" "Yeah." "Did you sell your Bitcoin right now? Did you buy at 67,500? Did you buy it at 67,000 and you sell it at 56? "No." "Well, then how can you say you lost thousands? You didn't lose anything. What you saw was," I said, "where'd you buy Bitcoin?" "A lot lower." I said, okay, so what you're telling me is that you're following the bouncing ball and you bought Bitcoin much, much lower than it is now. And you saw a $30,000 run up. And then you saw from there, you've seen about a $10,000, $11,000 pullback, right? So you're still up, what, 19, 20,000 from if you bought it at 30,000? You didn't lose money. And so, when you have a coin like this, it's a holder coin. A holder coin, the only thing you're seeing is movement in an asset that, by the way, is the most volatile asset on the planet right now when you look at day-to-day movements. That's what's happening. I mean, look at Bitcoin down 3%. Is the market down 3% right now? Is the stock market down 3%? No. Stock market is now not down 3%. Okay, so you can't take a look at Bitcoin, and because it is dropped from all-time highs down to, coming off a good 15%. We go from 67.5, take 67.5 and then take 57.5. There's $10,000 right there. That's a little bit more than a 15% pullback from all-time highs, which happened just as fast. Because if I take this chart back a little bit more, you can see what's happened here with this area. Okay, so you know what? Here's 57.5. That was back on the 27th of October. And within about 3 weeks, we're at 67.5. In about 3 weeks back down, we're now down to around 56,000. Right? So when you got the tiger by the tail, which is what you have here with Bitcoin, Ethereum, and cryptocurrencies, you're gonna get whipped around. That is what you deal with when you're trading the most volatile thing on the planet, right? So I do two things. What do I do? I don't look at this as much as everybody else does. Yeah, I look at it. I look at it for buying opportunities, but I don't look at it and go, "Oh my goodness, we're down so much. I should have sold at 67,500 and change when it tippy top, because I knew that was where it was going to go." No. None of us know where it's going to go. Okay. All we can do as rules-based traders is find opportunities to buy, opportunities to sell. But, if in terms of Bitcoin, I find opportunities to buy and hold. When it comes to Ethereum, and Ethereum is one of those coins. Let's put ETC up, or ETH up on here on the screen. Okay, take a look at ETH. Had a nice move off this bottom here. So Ethereum bottomed right down here around 4,000. All right, that's where the bottom is right now. We came up to around 4,400. It had a 10% move off the bottom. Then we dropped back down again. And then yesterday, 8% move. Now we're coming back down again. Okay, so there's some tests that are going on. But you got to look at the biggest picture, guys. All right. You got to look at the bigger picture here. All right. So when we look at the Bitcoins and we look at the Ethereums and we look at the Cardanos and we look at the Polkadots of the world, these are holders, HOLDRS. Leave off the last E. All right. These are holders, and they're going to whip around a little bit. I look at Cardano right now and I think, all right, Cardano's down. Cardano's getting a bad rap right now, but Cardano is a long-term bigger picture for me. But you know what? I look at Ethereum, for instance, and Ethereum's like, oh, the Ethereum, it's old news. We got all these new coins coming up. They're going to be so much more efficient. They're going to be so much more better, a better carbon footprint for the universe. Let me tell you something. I learned this a long time ago. Bitcoin and Ethereum, these are the foundational coins out there. All right. One thing I've learned is you dance with the lady that brought you to the dance. The two ladies that brought me to this dance are Bitcoin and Ethereum. Bitcoin because I started mining it, and I also bought a good bit of it. Ethereum because I stepped up and bought. And I look at Bitcoin or I look at Ethereum, and I hear folks saying, I don't like Ethereum. I'd rather be in something else that's more efficient. I'd rather be in something that has more transactional value over time. And while that may be true, I don't want to turn around and just sell Ethereum. Especially, Ethereum's is hitting 4,000, and I'm hearing this. I'm getting out of all of my Ethereum, or we're seeing people moving millions of dollars of Ethereum to exchanges to sell. Well, it didn't look like they sold yesterday because Ethereum was up 8%. I think Ethereum still has a big life in it as a currency, as a cryptocurrency, and definitely a big life as a cryptocurrency as far as what I am holding. Okay, so that's what I see for Ethereum. ADA, yeah, ADA is taking it on the chin. To me, it looks like an opportunity where I'm not buying ADA today myself, but I'm going to be looking to buy ADA when I get another buy signal. So where are my buy signals? Let's talk about that. All right, so we look at a couple of different opportunities here. And the one I want to share with you here is I look at Bitcoin, and you can see here, let me zoom in and you can see the chart here. So this is a Fibonacci retracement chart, okay? There's not a buy signal here per se. Do you see a B on the screen or an up arrow other than my mouse? I don't. But what I do see is I see a market or a coin that's gone up to 67,549 and has pulled back. And has pulled back in between the 38 and 50% retracement levels. These are 38 and 50% retracement levels, folks, that are right here on the last 100 days. The 100-day low, which was back here in September, the 100-day high, which was 3 weeks ago. All right? So that's what we see, but that's not the buying opportunity. The buying opportunity that I see, what I've got to do is come over here to something called darknet signals. Now, darknet signals give me what's called channel collisions. Let's look at some channel collisions. So we had a channel collision back here that didn't work out so well. All right, that was about the middle of September. About a week later, this thing said, nope, dropping through. But then 2 weeks later, the buy came back in literally at the same place the sell came in, right down here around 42,000, and then all the way up, and a nice move to a sell signal. Fast forward, we had another little buy and sell signal that happened in November, and then take a look at this. For those of you that are traders of Bitcoin, do you see what happened yesterday? Channel collision buy, triple stack buy, right there on BTC. That is a buy signal, okay? Is that a guaranteed buy signal that Bitcoin's going up from here? No. In fact, look what happened today. This was yesterday. Today, we've moved down, all right? All this tells me is that I have a chance to buy it at the price it was at yesterday, but buy a signal nonetheless. Let's look at Ethereum. ETH. So is ETH giving us signals? I don't know, because I didn't look at ETH this morning, but looky here. ETH. All right. So if you look at the last signals that happened with ETH, with buys and rebuys, I remember where these were. I don't even need the numbers to tell you where they were. 3,400, 3,800, all the way up here. 40. It was like 47, and then we got the buying opportunity again right down there around the 4,000 mark. All right. Actually, around 41. I think it's 4,100. Yeah, 4,100, and then we see 4,190 right now. It's coming back down. Another buying opportunity. Another buying opportunity for ETH, okay? And then finally, see, these things come in clusters for me. When we get triple stacks in one coin, we get triple stacks in a few. Here's another triple stack for you. You want another triple stack? Let's take a look out here and see what's going on in the world of YouTube, all right? Do we buy BTC today because it was a buy yesterday? I'm showing you the buying opportunities. I'm also sharing with you the fact that that they are a better price today than they were yesterday. These buy signals are not going away. This is not like Elliott Wave, where how many of you know what the Elliott Wave charts are? where you get a 1, 2, 3, 4, 5, and 3 in the fourth wave is the one that is probably the one that most people like to trade, that wave 4 buying opportunity. The problem with a wave 4 buying opportunity is that it causes problems where, what if you get a new low? All of a sudden that 4 moves over and you go, oh, what just happened? Elliott wave counts move with the markets. All right. What we've done with our triple stacks is that our triple stacks stay put. You see the winners, but you also see the losers. So, like I've said, no trades and nothing in this business is 100%. So here I have a buying opportunity. That B is going to stay there, win, lose, or draw. Let's look at one more. Let's look at one more opportunity, all right, because this is important. You guys want to look at Doge? Now, Doge is not one of my hold coins. It's a meme coin. I'm not a holder of Doge, but if it gives me a buying and selling opportunity as a trader, then I'm going to look at it. Well, look what happened 2 days ago with Doge, and we're below that price. But you got some really good support coming in down here around 20. We're at 21.30 right now. And what happened 2 days ago? Buy signal right below 22 cents. All right, so a buy signal there on DOGE, Dogecoin. Again, what do these 3 coins have in common? One's a foundational coin. One's a coin that many coins are minted off the platform, the ERC20 platform. And then one's a meme coin. So when you look at the fundamentals, they have there's no difference. There's nothing in common, but they all right now on price charts are hitting what we call triple stack compression. Triple stack compression. Okay. All right. So let's move along here. And you know what, Mark? I don't know the date of the BTC halving, and I don't know that date off the top of my head. I don't want to throw a date out there for those of you that that are asking that question, like Mark. I'd rather let me take a look, and then I'll come back on Monday, and we'll come back and talk about that halving date. You might say, well, what about tomorrow? I'm not going to be here tomorrow. We'll get to that. All right. So, hey, let's talk about the morning report, because I missed this yesterday. All right. So far, we've done a little bit of, I'm not going to go into the stock market per se. I'm not going to look at the spiders, and I'm not going to look at SPY or TLT. I did that yesterday. All right. But I want to jump ahead. I want to talk about this morning report. This morning report, first of all of you in the room here, all of you in the Monday Morning Live room, all of you on the YouTube channel, you all have access to this report. Okay. This is a report of 6 different lists that we update every single day, every single business day, market day. And this report is available for free for all of you watching these programs. Okay. Let me tell you how you get it. For those of you that don't, Apple Store, Google Store, all right? Works on an iPhone, works on an Android device, works on a smart tablet, iPad, smart tablet, whatever. You just got to go and download the app. Tom's Option Tools. Go in and type in Tom's Option Tools at the Google Play Store or the Apple iPhone Store or iOS Store, excuse me. And then type in Tom's Option Tools. You'll find that, download it, then you're going to install it, then you're going to go log in. You're going to say, wait a minute, I don't have a login and password. By the way, for those of you who do have a login and password, if you're tomsoptiontools.com users, just use your login, your username and password. Works fine. But if you don't, that's okay. Go down to the bottom. You'll see login password, then go look. Your eyes need to go down to the bottom of your phone, and you'll see something that says non-subscriber login. Follow the few bouncing balls there, and you're in. And when you're in, you'll see a suite of different apps. Now, all these ones at the top, these are all premium apps. These are premium apps for Tom's Option Tools members. They're premium apps also for our research services. For folks that take lifetime memberships, you get apps. You get actually access to the apps related to that service. But the one down here, it says Morning Report, that's available to all of you here. Click on that, and then that's going to open up these 6 different lists. We're going to look at the cheap and expensive list. We're going to do it right now. And I've already blown this up on the screen. I'm going to show you what we're looking at here. Here's the morning report. Here's the cheap and expensive stock options. All right. Now, I want to work with you on this. I want to work with you on this right now and explain what it is you're looking at here. So you see that one at the top, HPQ? By the way, HPQ was a trade that I did last week, and I was showing everybody here in the room last Tuesday. That actually worked out very, very well. So HPQ a week ago, 10 days ago, was not on this list, but it's come up on this list because it gotten very, very close to earnings. Now, you see this, there's no monthly fee for this app, all right? The monthly fee is free. You just go in and use it. I'm not, for our live members, I might pull this off of our app eventually, but for our live members, you got access to this. All you got to do is, you know what? You know what the cost is? Your finger. Click. That's all you got to do. Click, and you get it, all right? Where do we get training on how to use it? You're getting it right now, Kathy. This is your training. You're getting it right now. So you know what you do? After you download that app, you go in and you click on the app and you bring it up. And you see that right there, all right? And then what I do is then I click on morning report. And then I see I got my 6 lists. And we're going to go through the 2 at the bottom right now. So that's your training. We do this. I literally do this every day for a few minutes on our live segments. So you get training every day. All right. So let's take a look and see what it is. What is it that I'm looking at? All right. Expensive IV. Okay. This means expensive stock options, the ones you don't want to buy. All right. This is the rack. This is not the rack at Nordstrom Rack. This is the rack at Nordstrom. This is the Saks Fifth Avenue of options, the expensive options. So when I see Autodesk, NVIDIA, Activision's on that list, Xilinx is on that list, what that tells me is that these options are trading at their 1-year highs right now. Take a look at HPQ. You see where it says high IV? All right, that's a number that we look at and we rank, all right, using different data sets. And right now, that is the high that these options have traded for the year. The low is 23.60. Look where they're trading currently, 57.39. So if current is the same as high, then this tells me that these are expensive. They're the most expensive they traded in the year. By the way, these are the top 10. We rank them by how expensive they are in their 1-year range. Likewise, if we move on over to the other side and we click on cheap IV, these options are the cheapest that they've been in a year, and these are your top 10. Look at Harley Davidson down there. Hog, number 7. Okay, so the highest that the options on Hog traded at was 77.95. The lowest was 33.68. And right now it's at 35.32. That means that the Hog options, the calls and puts on average, are almost as cheap as they've been in the last year. Okay? So we can utilize these 2 lists, and I'm going to tell you how you utilize them. First of all, if you see something on these lists that you actually like, then you say to yourself, well, wow, I like NVIDIA. NVIDIA was on this list last week too, even higher. It was up in that 61 range. But let's click on NVIDIA. Let's look at a price of NVIDIA. And you're going to see when I click on that, I bring this up and I can see the price tag of NVIDIA. That's the chart. But then I also see, now I'm in tomsoptiontools.com, and this is where you can do this. And then I also see a black line. And that black line is the options values, the option premiums, the time value of options. As you can see, back here at the end of October, we were trading the options were cheap. And then all of a sudden they got expensive. All right. Along with the price of NVIDIA, the options got expensive too. Now, typically, any of you that know anything about options, you know that typically options get expensive as the stock goes down. But we've been having a melt up of sorts in the tech market. And that's why you've been seeing option premiums go up. So that's what happened with NVIDIA. So we're looking at NVIDIA. And we're seeing that this is expensive. So what do we do here? I can tell you what you don't do. You don't buy calls on NVIDIA if you're bullish, and you don't buy puts on NVIDIA if you're bearish, because you're going to spend too much money. Okay? It's like, you're going out, you're looking for a shirt like this one. Okay? Now, this is a flannel shirt. I don't wear flannel shirts that often. You know why? Because the weather in Florida does not dictate I wear a flannel shirt. But today it does. Now, if I'm in the market looking for a flannel shirt, there's two things I'm not going to do. I'm not going to buy a flannel shirt at Hollister. Well, first of all, I'm not going to buy a flannel shirt at Hollister. There's nothing there is going to fit me, right? But let's say I went to Saks Fifth Avenue. They sell those really nice flannel shirts, and they probably sell them for a couple $100, right? That's a $200-$300 flannel shirt. You know what I'm talking about. So you can buy a flannel shirt and you can pay out the nose for it, or you can go to Walmart, or you can go to Costco. Costco's selling flannel shirts right now. They're probably like $20. So would you rather pay $200 for a flannel shirt or $20 for a flannel shirt? All right. This right here, NVIDIA, is the $200 flannel shirt when it comes to stock options right now. It's expensive. I'd rather buy it down here when it's cheap. Now, if I go over and I look at Harley Davidson, I'm going to click on HOG. So I don't want to buy options on Compaq or NVIDIA. And the reason why I don't want to is because they're expensive. I'd rather sell those options. And that's exactly what we did with NVIDIA. I want to talk about NVIDIA here in just a few minutes. But take a look at this. This is Harley Davidson. See what happened to Harley Davidson? The stock price has gone from $44 down to around $39. Okay. And this has been since July. Dropped down. It had earnings. It popped up and is trading in a range. But look at the black line. This is volatility. See what happened in the last earnings? Right after earnings, crush. Volatility got crushed. And then it stayed down here for a few months. And then it started creeping back up again right before the next earnings. And the next earnings came out on Harley Davidson, and then crush. And those options went from being very expensive to cheap again. So if you like Harley Davidson, if you're looking at Harley Davidson and you're saying, well, the job market is as low as it's been since 1969. And I remember in 1969, I used to ride my Harley. I think I'm going to buy some Harley. If you think that's happening again, if history is repeating itself and people are getting out and they're saying, I want to buy a motorcycle because I got some stimmy money, and I like the feel of the air running across my hair. By the way, Florida is the only one of the few states you can actually let the hair run across you, because you don't have to have a helmet on. But I'm digressing. If you like Harley Davidson, then now's the time to buy calls on Harley Davidson, not last week. Okay? I have an HPQ January 2022 $15 call option. What do I do? Well, CC, I can't tell you what to do, but I can tell you I sold all my call options on HPQ yesterday before the earnings came out, because that's when they were their highest. That was when they were their highest. I like to sell high vol and I like to buy low vol. We're going to talk about a high vol selling strategy today. Okay. So riding a motorcycle without a helmet is stupid. You know what else is stupid? Buying expensive calls and expensive puts. That's like riding a motorcycle without a helmet. All right, because you're overpaying. Now, we look at this. We look at this chart and we say, all right, this looks like a buying opportunity. But I'm not saying go out there and buy Harley Davidson, guys. What I'm saying is that if you have a trading system that says Harley Davidson is a buy, I'm telling you right now, the options are cheap. They're cheap compared to where they were just a couple weeks ago. So they are a value. Okay. What else is a value? Well, look at Key. Key is a value. OKE is a value. RTX is a value. MAG is a value. STWD is a value. These are the top 10 cheapest optionables, right, that I'm looking at right now. And that's based on the rankings that we do with these every single day. So check it out, guys. Again, this is something that's available on the Morning Report. You can download this absolutely free, iOS Store or Google Play Store. Let's talk about probabilities. Last week, I was discussing different trading strategies. I am a pattern trader. I am a historical probability trader. I am also a statistical probability trader. I don't lean into one of those camps. It's kind of like I'm not a Republican and I'm not a Democrat. I'm an independent. I will go in the way that I feel best suits me, my family, and I'm a trader the same way. Okay, I trade seasonally, but I don't just stick to the seasonals. You're not going to hear me run out here and diss shorting naked puts. All right, I'm not a pure statistical probability trader because I believe that the markets have an element of fear and greed in them. But I put all of those together. Okay, think of me, as the Robin Hood of traders. And I'm not talking about the Robin Hood, when we think of Robin Hood, we don't think of that, that sharpshooter, all right? That person that's good with a bow and arrow. We think about the app. We think about the company. Think about Robin Hood. I steal from the rich and I give to the poor, okay? What I want you to think about is that when Robin Hood is pulling an arrow and locking and loading, how many arrows does he have in the quiver? He's got more than one. And so I want you to think about your trading arsenal, your toolbox, your quiver. I have statistical arrows. I've got seasonal arrows. I've got fundamental arrows. And I go where the strategy, the back-tested strategy fits me best. Today, I want to talk about statistical probabilities. Buying stocks today to sell them tomorrow. At the end of the day, statistically, you have a 50-50 chance. As you go farther out in time and you use historical probabilities, history tells us that over the long haul, the stock market returns about a 10 to 11% return on average when you look at all stocks across the board and you look at decades of data. But if you're looking out 1 day, 1 week ahead, you tend to err more toward, mathematicians will tell you that statistically has a what's called mean reverting, 50-50 chance. It's like a coin flip. Now, when you add options into this, and people always say, well, how much, when you look at options, how come option traders always lose money? Now, this can have its own discussion. It'll last forever, but I'm going to make it short and sweet. There are many reasons that option traders lose money, but statistically, option buyers have a lower probability of being right. And the reason why is you have a hurdle as an option buyer that you have to get past, and that's the time premium of the trade. So if you take a look at a stock that's at $50 a share, if you're buying something, or you're looking at what the probability is in the future, and that could be today, that could be tomorrow, that could be next week, that could be next month, of that stock being above 75. If your stock's at 50 and you're looking at it being above 75 by this time next month, well, that's a lower probability than it being above 50 by this time next month. If the stock's at 50 and you think it's going to be above 50 next month, that's a 50-50 move. But being above 75, less than 50% chance. Being below 25, also a less than 50% chance. So what we can do is we can use this simple piece of arithmetic and put it in our favor, right? Options, I've heard this before. Options are meant to be sold. Okay, options are meant to be sold. And I hear a lot of folks do that. And they take that strategy. And while I like that strategy, I don't think it's the only one we could do. But I can tell you right now, this particular strategy that I'm about to show you has bested any other option strategy that I have used on a win-loss ratio in the last 2 years. Better than anything else. And it's not because the stock market's gone up in the last 2 years. In fact, the stock market's had a bumpy road since the beginning of 2020. We had a big bump in the road in February and March 2020. We had some smaller bumps on the way. But looking at the markets this way gives you quite an edge, especially if you're not looking to make a day's pay. All right. If you're looking to make a day's pay, well, that's what day trading's for. But if you're looking to make a month's pay, if you're looking for dollars instead of dimes, if you will, to me, day trading, and I do a little bit of day trading, but I'll tell you what, you grind it out as a day trader. You grind it out, and you grind it out for what I like. Day trading to me is the minimum wage of trading in the markets, where when you look at this is where the wealth comes from. It comes from not picking up pennies, not picking up nickels, not picking up dimes, but picking up dollars and being able to trade smart, not hard. Day trading is hard. How many of you in here day trade? And please, let me know. Confirm to me if you think day trading is hard. And I'm not talking about, I follow Kenny or, I follow. That's fine. I implore you to get good following somebody that knows what they're doing. But guess what? It is hard. It's hard. And the reason it's hard is because it requires you to literally have a padded room, close that door, block out everything, turn off your phone, turn off everybody, because that's what you have to do. And it's a grind. The stuff I'm showing you, I trade the most of my trades are in the 30-day realm. What I'm showing you now is a 30 to 60 day trading strategy. You set it, you forget it. And we have to also think about the fact that we've got to go out there and look for stocks that we would not mind owning. All right. Last week I showed you this chart of NVIDIA. And we were talking about probability cones. That statistical move. Stock being above, stock being below. NVIDIA was trading above $300 last week. In fact, it was trading, I think, around close to around 305, 310. And we were looking at the buy zone being around 235. What we were doing was we were saying to ourselves, what would look like a good price to buy NVIDIA at? And we said, hey, down there around the low twos looks good. I mean, guys, this is 30 to 40% off. 40% off. I mean, this is a Black Friday sale right now going on with NVIDIA. Now, this is last week. I'm going to show you one for today, but this is NVIDIA's Black Friday sale right here. It's currently trading, and then this is last week, $300. Black Friday sale, $235. I mean, you could always just say, well, I'll put a limit order in. If it goes down to $235, I'll buy it. I got a better idea. How about I get paid to put a limit order in? How about I get paid to put a limit order in? So looking at the options last week, the December 31st, 235 puts were trading around $2.20. Okay. Again, that fire and forget trade. So what do? You sell that. You're now bringing in $220 on one contract, by the way. And what do you do after that? You don't have to do anything. You sit and wait. And there's your trade. And the trade, this is what it looks like. You have all this probability of profit. You have loss potential, but you know what you also have down here? The potential to pick up the stock at an extremely low price. So what's happened to NVIDIA since then? Now let's keep an eye on that December 31st. I'm going to bring that back up. That December 31st, 235 put. Let's go take a look at that. So I'm going to pop over to an option table. Let's look at some option chains. And let's look at option chains for today. And we're going to look at those in NVDA. So NVIDIA. I'm going to go out to those December 31st options. And by the way, I got to go down 40% down to find the 230s, 235s. There's the 200s. Here's the 235s. Look what they're selling for right now. Now they're $1.39. Okay, even with the move up and the move back down, because you know what they were last week? they were 220. So now they're 80 cents better. They're 80 cents cheaper than they were last week. Now, those of you that have never done this before, we're not buying puts on NVIDIA. We sold puts on NVIDIA. When you sell something high and it comes back down, you're making money. All right? This is up about 80 cents. What's the plan with this trade? Nothing. I'm going to sit in it. I'm going to sit on it to the end of the year, and I'm either A, going to get the stock, or B, I'm not going to get the stock. But guess what C is going to be? C is going to be, it doesn't matter what happens with A and B, I'm keeping the money. I'm keeping the money. All right? Now, I want you to know something. We'll talk about margin. We'll talk about a couple of other things here in the trade. But margin is typically about 20% of the price of the stock. So if you look at the price of stock, in this case, or not the price of stock, excuse me, it's 20% of the strike price. So if you look at that, let's round that up to $24.48. So that's going to cost $4,800. And then you could take, and then some brokers will allow you to take off what you brought in. So if you want to lower your margin, you want to lower the cost of this trade, you sell higher premium stuff. Okay. So that's the video. I want to show you a trade I was looking at the close yesterday. So let's look at a trading opportunity right now. So the trading opportunity I have right now was in Zoom. So looking at Zoom, was on our top 10 most expensive options yesterday. See it down here. All right. And I move along and I say, all right, well, what's going on with Zoom? So we take a look at Zoom. And Zoom was looking at the two. Oh, wait, that's NVIDIA. My bad. We're looking at Zoom. Sorry, I went backwards. So what happened to Zoom yesterday? Zoom zoomed lower. Zoom zoomed lower. And you see that big drop that happened. I mean, we dropped down below 200. I snapped the probability grid and I go, where's the buy zone on Zoom? Because Zoom was at $600 at one point earlier in the year. This thing has dropped down and it's given back more than half of the stock price. So I'm looking at it, I'm saying, well, Zoom's a viable company. You know, a lot of us use Zoom. And yes, there's going to be people going back to work in the office. Thank you, Fox. Thank you, CNBC, for letting me know something that I already know. But not everybody's going to go back to the office. There's a lot of folks that are going to continue to work from home. And there's a lot of companies that realize that their employees are almost as productive. Almost as productive. And the costs, the benefits outweigh the costs. So I think Zoom's going to be a viable tool for years to come. Now, where's the buy zone in Zoom? All right. Well, it's down here somewhere. Down here between the blue and the red cones. The blue cone tells us that this is likely the price that Zoom's going to stay in by around 68%. The red cone says that this is likely to stay in the red cone by 95%. Notice that the cone moves up more than it goes down. That has a lot to do with price and something called log normal distribution. We could save that for another conversation. Basically, this gives me those statistical probabilities. Now, while I don't want to be some seller up here to the upside, being a buyer to the downside makes some sense. Or looking at how to create that buying opportunity by selling puts. Let's take a look and see what's out there. Here's the 160s. The 160 puts for Jan 2021 yesterday. We're trading from around $3.70 to $4. Let's see what they're going for today. Popping on over. Let's take a look at Street Smart Central. ZM, I'm going to type in the symbol, Zoom Video Communications. Okay, so if I'm going to sell a put, I'm going to go find the put, and then I'm going to select, I'm going to sell to open that put. All right, and then I'm looking at what? The Jan 21 puts for 2022. And then I'm going to be looking at what? Those 160s. What are the 160 puts selling for? Wow, they dropped a lot. And a lot happens in a day, doesn't it, guys? A lot can happen in a day. But you still might get $3 for these puts. It's your determination of what you like and for how much. That's the important part of this lesson, right? Still a high probability trade. If I want to do this for 3, I can put a 3 in there. That's a limit order. I'm selling the open 160 puts for 3 or better. That means 3 or more. If I get filled, great. If I don't, I move on. Now, let's talk about how effective this position has been. All right, how effective has this been? Well, it's been very effective because it's a high probability trade. We do this on stocks. I do this. I set these up that have statistical probability of 90% or better on first-class stocks. That's what we do. On stocks we want to own. Typically 60 to 90 days out. The IV, that's the option premium, has to be in the higher range. A higher ranger IV. And I want to position size it to where I will own the stock if it goes down and I get assigned the stock. Now, on the exit side, how do you exit these trades once you put them on? Well, you can let them expire worthless. That's what I do most of the time. You could take the assignment. That's if it goes down and you get taken the stock, and then you decide how you want to handle the stock. If you want to sell it, if you want to put the cover calls on it, or maybe you want to hold it. If you want to exit early, let's say that you're not going to get assigned the stock and it goes down and you've made 90%. Let's say you did this Zoom trade for 3 and now it's worth 30 cents. And you're sitting here looking at it and saying, wow, I'm going to be stuck in this thing in another month for just 30 cents. Do a buyback, 10% of what you brought in, consider buying that back. You free up that margin and that capital for the next trade. What's the next trade? Let me show you what the next trade could be. The next trade could be a Rocket Wealth trade. We do these every single week. By the way, I'm showing you right now. This is November. No, this is the last 90 days. This is our quarter for Rocket Wealth. By the way, we've only had, I think, 2 losses in the last 2 years of trades that we do on a weekly basis. 2 losses in the last 2 years. This is the last 90 days. We look at these on monthlies and we look at these on quarterlies. Not a single loss in the last quarter. Look at those trades. Facebook, NOC, Beyond Meat, Roku's on here. Zillow, Autodesk. By the way, these are all closed positions. AAP is on here. Ulta Beauty is on here. Look at the ones we took in November. Just last week, we took 5 trades off. AAP, HLT, FTNT, AMAT, Ulta Beauty. 100%, 100%, 100% for you, 100% for you, 100% for you. All 100% winners. We got a good bit of them stacking up again. All right. Got a good bit of them stacking up again. All right. And Earl says, seems this would require a lot of margin. Well, guess what you can also do? And we teach this in the live events, guys. How to drop the margin on these by 80%. How to drop your cost and your margin by 80% and still keep the high probability. We do that with our Rocket Wealth traders as part of our live events every day. Okay. So, how do we find these? Well, and this is something that, for those of you who in the room here follows me with our Rocket Wealth publication, our Rocket Wealth service. Who in here is a Rocket Wealth trader? Let me know. Kathy follows us in Rocket Wealth. Well, and some of you out there are lifetime members. And if you're a lifetime member, you get access to one of our hedge fund tools called Sell Puts. And the Sell Put tool is coming up right now telling me this. I just snapped this morning. You know what it tells me? Marty says, no, I'm not, but how do I join? All right, that's where Billy, that's where Perrin comes in. That's where the GOAT comes in. GOAT, tell them how they join Rocket Wealth, because that would be something that some of the folks in here would be very interested in knowing. How do I get access to trades like this, where we've had 100% winners? The 2 losing positions, the 2 worst positions in the last 90 days, an 84% gain on Zillow and an 83% gain on Autodesk. Everything else was 100%. There's some people in here interested in knowing. GOAT says, give us a call, 877-212-9163, and he can hook you up. But I'm showing those of you that are Rocket Wealth, and of course those that are not right now, some of the big rocket wealth potentials on the watch list are Tesla, now. Yeah, that's actually a stock symbol, now. Nvidia's back on there again. Ford. All right, you want a one that has a low possibility. All right, a low cost, a low risk. Ford. So check that out, guys. Rocket Wealth. Hey, last thing I want to tell you guys. I'm going to be taking a couple of days off here because we got Thanksgiving holiday tomorrow. And yes, I'm going to take off on Friday. And I always take off Saturdays and Sundays, even though crypto's moving around. But I want to wish all of you a happy Thanksgiving. I hope you enjoyed the upcoming weekend that's coming up. We're taking some time off over here. I will be back on Monday, locked and loaded and ready to educate, ready to trade again. Thank you all so much, both of you on Monday Morning Live and on the YouTube channel. Hey guys, you know what to do on the YouTube channel. If you like what we're doing here, adding these live streams, we do 3 days a week, then show me some love, give us some thumbs up. Thank you all very much. Happy Thanksgiving to you. We'll see you next week. Bye now.